Hi, hi, hello. I'm gonna open some nice song. Soundtrack, 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 soundtrack. Hello, hello. Soundtrack, soundtrack. Good afternoon, my friends. Good afternoon, my friends, family, student, apprentice, traders, everyone. Welcome to the class. Good afternoon. Oh my God! I just had, I just had lunch. Whew. Okay, I did two live stream yesterday, and I'm gonna share you how I thought about having two live stream within a day. First, doing live stream market analysis on TikTok, it's kind of weird. It is weird because it doesn't have that kind of visual effect that we are enjoying right now. You see, right now we have this beautiful little circle, and then you have this horizontal big space. Like you're in a very big space, right? You're in a big space, big living room. Everybody is just comfortably sitting right here, hanging out. And when you do live stream on TikTok, and TikTok actually force you into a vertical situation, so into a vertical frame, and which means that the audience and the student that are from TikTok, what they see, they cannot see the full picture of MT5, they cannot see the full picture of um, Profit in Peace, my educational content, and more importantly, they cannot see the full picture of the chart. So first time doing TikTok live on TikTok Live Studio. Personally, I don't really like it. I enjoy YouTube live more, but let's give it a try. I'm still figuring out, how can we, really pull it off for the TikTok audience, because I want to expand to the TikTok market as well. It's just that TikTok really don't have that kind of visual effect that we are enjoying right now, right? So right here, even though that you guys may feel slightly lazy after lunch, maybe you guys feel not really motivated today, but still it is a very cozy room, right? You're in my room, in my present, and we are just having a good time. It is spacious, we can have a chat, everything. But um but for TikTok, it's just too small. It's like everyone is like being stretched in in a very 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 crowded lift. Before we continue, let me close the light first. I think it's way more better if we close the light. Just a moment, right? Way better. All right. Now we have it. Now we have it. Okay, let me adjust the light a little while. Okay, cool. Okay, so who do we have in our class today? We have Ong Kau Kau, Damien, Jacqueline, Momo, Alan, Johnson, Alvin, Brian, Cora, Alan, Charlie, Christina, and someone have his wife cook today. Good for you. We have Josh, Alan, Japanese tofu. Okay, today is a very chill vibe. Huh? Everybody is like talking about food. Everybody is talking about food. Everybody just relaxing. And somebody say they want to have mapo tofu. Okay, okay. Good, good. So guys, now I know that it is a kind of odd timing. You know, I'm thinking of like changing the live stream timing from like 2 p.m. maybe to later, because like 2 p.m. to 4 p.m., you know, sometimes it's just the crowd is really not there. And I really I want my voice to reach to a bigger audience instead of, you know, just a small audience. It's not that you guys are not good. It is that I feel that it is way more important for us to really deliver what is profit in peace, you know, the philosophy behind, the framework, the educational content behind, to reach to a bigger audience. And I can feel much more motivated when I'm, you know, going to a bigger audience. So yeah, I'm thinking of, you know, maybe like negotiating with our strategic partners. Maybe we're gonna change time. We're maybe gonna change the time to, you know, maybe night, because 2 p.m., 4 p.m., very, very less crowd. So guys, do me a favor. If you have any friends that feel like want to learn from me, learn from us, and they are actually, you know, they didn't get the notice of joining this class, please do me a favor and do yourself a favor. Please don't hesitate to share this link of the live stream to your friends, to your family that want to learn about trading, that want to learn about technical fundamental analysis. Okay, so we have Deepu Dasani. Hi, Mr. CG. Hi, welcome back. So yeah, we're just talking about lunch, bro. Chill, chill. Manson say today is my third class. Yeah. All right, guys. Let's start the class. Okay, let's start the class and stop joking. It's time to get serious, guys. It's time to get serious right now. Okay, no more kung po chicken, ma po tofu. No more, you know, wife or husband cook for each other. No. Now we're going to business. Now we're actually gonna learn about trading right now at this very moment. Okay. Are you guys ready? If you guys are ready, yeah, we get serious right now to CG. Yes, we get serious already. It is time to get serious, guys. Or else this entire live stream is gonna turn into a live stream of ASMR. And I'm probably gonna buy myself a burger and I'm gonna eat it in front of you, like chuck 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 like that. So we don't do that, okay? We don't turn this into ASMR, guys. We don't turn this live stream into an ASMR where we're gonna talk about food, we're gonna discuss about culture. No, we're gonna talk about making money, okay? We're gonna talk about how to make money in Malaysia, Singapore, Southeast Asia, Vietnam, Thailand, Indonesia by making US dollar right here, guys. Okay? And so that we can not only discuss about mapo tofu, but you can also go to Japan and eat, you know, your A5 Wagyu as well. Okay, that is what we want to do. So Alan say we talk about arm on and arm off. No, today I'm not gonna talk about arm on and arm off. You guys probably understand every single thing about that already. Today I'm just gonna do my thing, okay? And you guys, you just do your thing. All right, you guys just listen, and then if you have questions, feel free to ask. If you don't have any questions, sit back, relax, and enjoy the class. That's all. Okay, today is gonna be much more a chillax approach. All right, a very chill approach. So right now we have like 22 viewers in the class already. So I believe that some of you guys are new to me. I believe that some of you guys are already familiar with me, but let me introduce myself once again. My name is CG and I am the founder of Profit in Peace. So, Profit in Peace is actually a class where we educate new traders, especially retail traders, how to really work from the upstream of retail trading. Now, when I say upstream, you need to understand there's a lot of time when we go into trading, we are actually thinking problem and answers from the downstream. I'm going to give you an example. Why do you come to trading? You come to trading because you saw your friend or your peers suddenly post profit on Instagram, and you saw the profit, you saw profits, you saw the lifestyle, you saw the BMW M5, you saw the BMW M3, you saw the Rolex, you saw the Hublot, and then you want to trade, okay? Or you saw your friends, traveling around the world, opening the laptop on Bali, Phuket, Pattaya, and then they live a freedom lifestyle, and then you want to trade. But guys, those are the downstream effects of successful trading. Now, for retail traders, and why do I design Profit in Peace? Because that I believe in an education system that focus on upstream problem. Okay, and what do I mean by upstream problem? Upstream means that rather than only behave and react to things that are on a surface level, we're gonna learn things that are on the structure level. So everything I teach, everything I preach, everything that I use myself and I teach my student is all from the upstream. Okay, in Mandarin it's called 本质. Okay, we work from 本质, work from the very upstream of everything. Okay, so that is how I do it. So sometimes there are students that tell me that, oh, CG, your approach of trading is very philosophical. Well, if you do something long enough, everything turns into a philosophy, right? If you really dive deep into the craft that you're working towards, it turns in you'll become a philosopher, because eventually you will understand you need to spot things that are kind of abstract, and you need to really understand things that are invisible that the eye cannot see, right? So there's a famous book that I read. It is from a Nobel Prize winner. I think I remember his name is like Daniel Kahneman. I remember it's like Daniel Kahneman or what. Yeah, that's the book. I'm gonna show you guys that book. Just a moment. Right. It's by Daniel. Yep, it is by Daniel Kahneman or Kahneman, I'm not sure, but Daniel Kahneman. It's much more. So this book is called Thinking Fast and Slow. Now, what's so special about this book is that it is a book that talks about how our brain operates, right? We sort of like operate in a way that using two systems. One is system one and another one is system two. So a lot of time when we trade, when we make a decision, we always try to use system one to react. So for example, if you go to the market and then you see a higher high, the system one in your brain is trying to tell you that is an uptrend. Got it? And if you saw a lower low and then you saw it, right, a lower low, and then it means that it is a downtrend. So that is system one working. Now, the good side, the bright side about system one is that system one allows you to react very fast. When you drive, when you want to do like emergency brake, when you want to like, react faster to avoid an accident, you need system one. But when you go into the financial market and you try to use system one to react in everything that you do, well, you're gonna be chaos, okay? Because if the market is so simple, then everyone's gonna be a millionaire already, including, your 10 years old child, okay? So what I'm trying to tell you is that we need to use system two, which is a deep thinking process to see beyond the visual and understand what is actually behind, right? There are times when you look at a person and then maybe his or her face is emotionless. His or her face may be like, meh, but maybe, he or her is just not in the mood. Maybe it's just neutral. Maybe it's not like angry. But we try to portray everything very fast. That is the thing about System 1. So why do I design this class? I designed this because that I intend to teach you guys from System 2 to see beyond things that are, you know, visually fast for us to interpret. Okay, so now today, every time before I start the market analysis, I will give you guys a quick, short sharing session about something else, like the storytelling before we go into the real deal, right? So today I'm going to share with you guys about a book that I read. Okay, it's called Against the God. Okay, Against the God. Just a moment, let me fill the tea first, because I'm going to tell story already. And okay, got it here. Got it here. Guys, are you guys still like talking about lunch everything, or are you guys like really serious right now? Because I see someone say that you're gonna be serious and nobody is actually reacting. Are you guys serious? Are you serious and ready to listen to the story? If yes, please click yes in the chat box, okay? Okay guys, now welcome back to the class. Today I'm gonna share with you guys about something that is regarding about risk. Okay, the origin of risk in Mandarin is called 风险. Okay, we're gonna understand the fundamental origin of risk. We're gonna understand 风险的本质. Okay, so what is risk? Okay, and after this class, you will have a really good understanding on what is risk. Okay, now before we begin, I need to do a disclaimer. Okay, this class is not a critique of any religion, faith, or concept of God. Me, myself, I have my own faith. Okay, I do pray. And this session is actually about how human thinks about uncertainty, not what anyone should behave or believe. Okay, so some ideas may feel uncomfortable for you guys. That discomfort is purely intellectual, not spiritual. If this isn't for you, feel free to swipe left to the next video. And if you're open-minded and curious, you're welcome to stay in this class where I'm going to share with you what do I mean by against the God. Okay, now first thing first, I want you guys to really understand this phrase, right? This is a very common phrase that we use on daily basis. It's called what are the odds. Okay, when it happens, when someone get lucky or get extremely unlucky. Maybe you go to your girlfriend and you say that, hey babe, today I accidentally fell down. And your girlfriend will say, wow, what are the odds? Like it is like a subtle sense of sarcasm, but it's like, what is the probability that makes this happen? What is the probability, right? What are the odds means that what is the probability? Now, I want you to really understand 370 years ago, that question, what are the odds, did not exist. Okay, 370 years ago, nobody asked that question about what are the odds. Now, I want you to take a good glimpse about a normal day in the 16th century, 1650s, right? So 1650s, what are the normal day like? Now, it is not a really good time for humans to live. Okay, most of the people are farmers. We don't have AI developers, we don't have traders, we don't have scientists, we don't have doctors, right? We have a lot of people that are in agriculture and they are farmers. And during that time, everybody is relying on the land for food and survival, and one bad harvest will wipe out all of your effort in a single season. Now, people, world trade used to be only, world trade is already kind of active. That's already world trade, but only wooden sailing ships, making journey on uncertain and often dangerous sea, which is eventually, if there's a storm, people being wiped out and then gone. So death rate is very common. Birth, sickness, and any travel were very risky, often lead to death. And more importantly, about half of all children, newborn children, did not actually live to become adults. Can you imagine that? Like if you have 100 babies newborn, you have like 50 of them did not manage to make it into adulthood. So that is a normal day in 1650s. Now, what actually changed today in 2026? Does storm still happen? Well, storms still happen, right? Does illness still exist? Yes, COVID was like 6 years ago, right? People are still having illness. There are still illness that is unsolvable, uncurable. Children still die today, but at a lower rate. Accidents still occur. It happens every day, right? It doesn't mean that we have higher technology, we have ChatGPT, we have DeepSeek, we have Gemini, and then we don't have accident. No, accidents still happen. What I want to tell you is that shit still happen on daily basis. Nothing actually changed about uncertainty. Now, what actually changed is that we change how we deal with uncertainty, but shit still happen, right? The way that we deal with uncertainty change despite the fact that shit still happen. Okay, so same problem, different solutions. You know, back at 1650s, okay, people deal with shit very differently. In the 1650s, okay, in the 16th century, if you have a bad harvest, all you can do is pray. In 2026, you can actually analyze soil data, weather forecasts to really accurately measure where you should, plant your seed, or when should you plant your seed, okay? And storms, right? In 1650s, people, if you have a storm, all you can do is to pray to Poseidon so that the storm will, the sea will actually take good care of you, okay? And in 2026, you have weather models and weather forecasts as well, so you can know when is the best time to go out there to sail. Illness, if you got illness, fever, all you can do is pray, okay? But in 2026, you have medical diagnosis, okay? And you even have body checkup. And death, well, today, well, we still have, of course, we are still dying. We didn't achieve immortal. We cannot live forever. But in 1650, all you can do is pray as well. And 2026, you have risk reduction, safety system. We still die. It's just that now we have insurance to really try to cover the cost of living if anything happens to us, for our family, for our spouse, right? So what is the subtle difference, right? What actually makes a difference? Why people, back at the 16th century, all they can do is pray, but today we can do this and do that, we can do this and do that. What is this and that? It is called measurement, right? We try to measure, we can measure stuff already. So this is what's so unique about 2026. And the subtle difference is that in 1650s, uncertain, we deal with uncertainty with hope, right? In 1650, we deal with uncertainty by using hope. But in 2026, we deal with uncertainty with numbers, okay? With numbers, with probability. So this is the difference, shape, the different path that we took, to deal with uncertainty, aka deal with shit, okay? So now, how did this actually happen? How did this actually happen? It happened back at the 1654, where two gamblers can't agree on how to split the bet. Okay, now I want you to really pay close attention on this story, because this is actually the origin of probability, the origin of how we calculate risk, and more importantly, this is the origin of stop loss and take profit. Okay, this is the origin of lot size, the origin of the insurance, the origins of your car insurance, your investment, everything. This is the structure of the modern finance and the modern society, and it all started on this table. Okay, now 1654, there are two gamblers. Okay, they could not agree how to split the bet. They could not agree how to split the bet. And why is that, right? Now, let me tell you about the rules of the game, okay? The game on that table is that it is much more sophisticated, but I make it easy for you to understand. Just picture this. There's two players. The first person that win 5 points will take all the money. Okay, I'm going to repeat. There's two players, player A and player B. The game is very simple. The first person to get to 5 points will win all the money. All right. Now, what happened during that situation? Player B has 4 points. Okay, player B has 4 points right now ahead, right? And player A has 3 points. But suddenly, guys, suddenly the game gets interrupted and it is forced to end earlier. Snap, game pause. Okay, the game pause, and right now there's this very awkward situation. Because the awkward situation is we need to ask the question, so now who gets the money? Right? Who gets the money? You may think, well, it's a very easy solution, right? It is a very easy solution. Some people will say that, okay, option A. Option A may you give it all to player B, right? Why you want to give it all to player B? Because giving it all to player B, because player B have 4 points. Guys, will you give all the money to player B? A lot of people may say, yes, of course we want to give all the money to player B, because player B is 4 points and player A is 3 points. But guys, the reason you give the money to player B is because of deserving. That is a problem. The rule of the game is the first person to get to 5 points actually take all the money, right? So if you give the money to player B, which means that you are not actually, respecting the game at all, right? And some people will say, okay, let's be fair, let's be equal, let's split the money 50-50, right? So, but if you split it 50-50, it is also not respecting the rule of the game as well. Because the reason that you advise to give 50-50 is because of, well, equality. You want it to be fair, but it's not about fair. It is not about virtue. It's not about morality. It is not about righteousness. It's about the game, right? And C would be somebody argue, and until somebody gives out. The reason is very primal, because I can, right? I'm more fierce than you. You're gonna give me all the money. So you see, it is not fair. It is a problem that cannot be solved for many years, right? The problem of points is, it is actually a problem of points that is pointed out by Luca Pacioli. It is a mathematician, right, back at the 14th century. And that problem that we talked just now, is just unresolved, unsolved for 160 years, because no one knew how to bargain with the gods. Why nobody understand how to bargain with the gods, right? Why is that? Okay, now let's take a look. The question is this: if we stop the game now, who deserves the money, right? From 1494 to 1654, that question actually had no answer. It only have opinions, right? People argue, people guess, and they prayed. Okay, we cannot, like, who should we give the money to? Okay, now why is it so hard, right? It is hard because that it is unknown. The remaining round is unknown, and there's no probability assessment and fairness without numbers. Now here's the thing. What is the missing puzzle? Now the missing puzzle is this: somebody finally stop right there and start to ask a question. They start to ask a question of what if. Okay, now before the game continues, let's say you are player A and I'm player B, right? And then I'm 4 points and you're 3 points, and the game stopped. The game stopped. Before we continue the game, we start to negotiate. We start to map out all the possibilities. Okay, what if we keep on playing? What are the odds? Maybe you have a 70% chance of winning. Maybe I have a 60% chance of winning. We are mapping out, all the possibilities of how this game could go. And then we start to calculate the possibilities. And you see, that act actually opened up a whole new spectrum of reality, right? It is the fourth option. So what is the fourth option? It is a very simple idea that rewired how we see the future. Okay, it is a forbidden question. So the forbidden question is this: what if we counted every possible future before we continue the game? What if there's what if you play 2 rounds? What if I play 1 round? What if we start to, like, analyze everything that is possible? Same like what? Same like your insurance company, right? Some people say in the chat box saying that when I talk about, insurance company, you remind about your commitment. Well, why do you want to take that commitment, right? Who says that? On Cao Cao say, when I think about car insurance, I think about my commitment. Well, let me ask you a question. Why are you willing to take that commitment? Why are you willing to take the commitment to spend 200 to 300 bucks every month of your salary, of your income, to contribute to insurance? Because you start to calculate future, and your insurance agent is the one that sells you a future that shit might happen, right? It sells you a future that you agree that, well, you are a human being, I'm a human being, we might have sickness, we might have accidents, we are human that are exposed to uncertainty. So after considering all the possibility, I think it is worth it for me to pay 200 to 300 bucks for me to, not decrease the risk, but to capitalize, to hedge it, right? To hedge the risk. If anything happens to me, or you have something to protect yourself and your family, right? You counted every possible future, right? So that is the what if, right? What if we map all the path the game could take before the future happened? Same goes to insurance, right? So this is actually what happened back then. So there's 3% that rewrote the entire rules. Okay, we have Chevalier, we have Pascal, and we have Pierre de Fermat, right? All 3 of them is the one that play the game and start to ask the forbidden question, which actually, release the genie from the Pandora box and open up a new perspective to deal with reality. Okay, we start to question that is it possible for us to really negotiate with the gods, okay? Not by just praying, but to negotiate, okay? So finally, we can, count the unknown, we can measure the unborn, and we can betting with reason. And that, my friend, changes everything, right? We stop praying our children will survive and started buying health insurance, okay? We stopped guessing, which crop to plant and started forecasting what is the best weather to do so. And we stopped fearing the unknown and started asking something that is very, very profound, but so normal today, which is, what are the odds? Now that, my friend, is actually the origin of risk management. Now, if you really understand what I'm trying to tell you, that is the origin of risk management, and that is why you set your stop loss. That is why you calculate your lot size. That is why you measure, by your indicators. That is why you want to see, chart patterns. That is everything. Everything that we do on the chart is actually asking this very simple question: what are the odds? So when shit happens, we won't, being wiped out by one single trade. Okay, so that is for today short little class. I hope that you guys actually enjoy it. And right now, let's look at the response in the chat box. Okay, so guys, everybody, did you learn something from this class? If you learned something from this class, type yes in the chat box, right? If you learn something, you have a better understanding of the class, of what is risk, type yes in the chat box. And now we are going to put this learning into practice. We're going to go to the chart. Okay, we can finally go to the chart and start to understand, what are the odds like. Okay, we're going to make a quick recap on yesterday. Now, speaking about yesterday, okay, before that, let me wait. All right. Now, let's make a quick recap on yesterday's trade. Okay, this is a very interesting one. I'm going to show to you guys. Okay, now yesterday we analyzed gold together. So we take a look at the H4 time frame. If you guys understand how I roll, you know that I trade with agreeable rotation model, ARM. Okay, agreeable rotation model, which we make money from price acceptance. Okay, so we make money from price acceptance, which means that before we analyze uptrend or downtrend, we need to understand what is the current state of the market. So yesterday we already make our analysis and we discover that actually the most traded volume of gold and US dollar is from, let's calculate from here, the lowest. This is not the lowest. Okay, this is the pullback, the lowest point of the pullback. Oh, this is not the lowest as well. Right, this is the lowest. Okay, so right here, and then we're gonna put it until the highest point. Yep, the volume right here, you see. So yesterday we sort of like figure out where is, just join any signal, trade on X. Christy and Jason, I don't really get the question that you're asking, but for your information, right now we are still in the process of doing market analysis, so I'm not providing any signal as of this moment. Okay, right now the only signal that I'm providing is my thought process and how I really measure the market, so that you guys can understand how do we actually learn to trade ARM, okay, agreeable rotation model. Now, do we have a signal? Well, I cannot promise that because I am not God. I'm trying to negotiate with the God, which is market. Okay, so yesterday we make a a market analysis to check where is the market, the price that buyer and seller actually agree to trade, and then we found out is around this range. Okay, we have actually two range that is most traded. The traded range is actually from here. This is the most traded range of all. Okay, and then we start to make a marking of this zone as well, this pullback. Okay, this pullback right here, and then we understand that it's forming a compression, and then this compression is actually not powerful enough. I'm going to show you why. Okay, you see, if we use the fixed range volume profile and then we go from the lowest point, starting point of the week, and then to the highest point of the week, and then you can have a really good measurement on where is it actually being traded. Now here it is actually forming this zone right here. You see, it is actually forming as well. And yeah, we have based on the 4-hour time frame, we understand that actually the price is much more favorable to actually go from back to this around this two zone right here. Okay, because you see the traded volume around here is actually not that strong, to be honest. The strongest one would be here, and even though that it has a breakout, but still it is actually playing around this zone. Okay, you see the breakout actually fails, go back in, and then forms a new compression, and then it fails to form a compression again. Now yesterday we go to the 1 hour to determine, like, is it I'm on or I'm off. So well, what we do yesterday is that we try to understand that, is it the pullback actually strong enough to come back here and place a trade. So we go to 5 minutes, and yesterday we did put a short trade around this model. See, where what we want to do is that we want to see the price actually break through this ceiling, and then because of the the price that is being accepted back here, so therefore we trade the agreeable rotation model of price acceptance, where we make a quick profit around this area, right? So this is what we are actually talking about yesterday. Now the next thing would be, let me show you how do we actually analyze some new potential trade again. This time we're gonna do it quick. Okay, this time we're gonna do it quick. Let me erase all this. Okay, now let's take a look at silver. Okay, let's take a look at silver. Let's remove 8 drawings. Silver, we're going to 4 hours. Okay. Four hours. Now, before we draw the horizontal line, first thing that we need to do is to understand, where is the buyer and seller actually agree, to make most of their trade. So in order to trace that, what we're going to use is actually the fixed range volume profile. All right, a fixed range volume profile here. And then from the highest swing of, the week of the price, and then to the lowest one. To really take a good look on, where is the most preferable, trade that is actually going on in the market. So we're gonna do a two version. One is here, and another one is around, I think this is 9.2, 212, 212. Yeah, this one. See, so you see, based on the two, the two indicators, two of the fixed range volume, and we can actually, so somebody, MD Shaludim, is this a skill for trading? Well, yes, this is actually a skill to use to actually understand what is the regime, the emotion of the market. To give you more context, we are actually using auction market theory as our hypothesis. Okay, hypothesis is like a compass. Okay, if you go to the financial market, if you don't have a compass with you, you're pretty much gonna fuck yourself up, right? Because you're gonna be like swinging and flowing everywhere. So everybody that goes into the market, eventually you need to have your very own compass. And my compass is auction market theory, where I use a hypothesis that is reliable, that happens for decades, where we have a premise of everything that is happening in the market is actually an auction, a dynamic interaction between buyer and seller. So therefore, I am not trying to predict or forecast uptrend or downtrend. That is not my trading philosophy. That is not my trading strategy. To me, in my brain, I don't have uptrend buy, downtrend sell. I don't have that. To me, I only make money from buyer and seller shake hands, and this is the zone that most of us agree on, and I want to like place myself in that zone where buyer and seller are making the most trade. Okay, so to me, understanding where is the buyer and seller make the most trading volume is much more important than understanding where the trend is going to go. I know that some of you are really good in trend trading, and I think eventually it is just, end of the day, it's just about you discovering your very own edge. And for me, what I can share is auction market theory. It is how I make the most of my profit in live stream and in self trading as well. Okay, so this is actually not about not only about skill, it's actually about reading the volume of the market. So right now I want to show you guys the indicator that I use to understand where buyer and seller gather their position is the fixed range volume profile. Now I use a higher time frame to understand where is the state from a macro point of view is. Now here we can actually spot a very reliable source that we're gonna market, right? It's around here. Okay, it is extremely aligned even though with two, fixed range volume profile. Okay, and I'm gonna make it a very thick line so that we know that it is, it has that kind of importance. Okay, right here. So this is the part where a lot of buyer and seller agree to do their trade. Now, then we need to start to see, is there like a second layer where the market has reacted? Okay, but right here, we're gonna use this line, as this line as a reference, okay? And then we're gonna zoom in to the 1 hour and see what do we have. Okay, so for now, I'm gonna add an alert to remind me about, the importance of this key level right here. It is an extremely important key level. Okay. And another thing would be a good measurement of the power of the current pullback. Okay. From here. Okay. So, based on what we see, it has a potential. It has that kind of potential where the market is actually, forming around here, but we need to take a closer look. So what does it mean? It means that buyer and seller are much more comfortable in this area, okay, rather than here. So it means that you see the compression is forming back to this zone. And when it's back to this zone, the next question would be, where is the agreeable zone where most of the buyer and seller actually agree upon, so that we can, do our magic with the ARM. I'm on and I'm off, right? So 1 hour chart, take a good look and let's see, can we really find the zone that we're looking for? Okay, right here. Always start from the lowest wick of the price and then go to the highest one. The highest one. Is this the highest one? No. Okay. Nope. Yep. This is the highest one. Okay. Now we got it. Okay. Now this is actually another level that the price is actually forming. So this, you see, the one that is actually weakening, it means that it is too far away. It actually means that, buyer and seller actually, let's forget about this price. Let's forget about this price. Let's move on to something better. Let's move on to another promised land. Okay. So that is actually, we don't use that as an indicator anymore. But here, guys, here we do have a potential new level is being formed. And in order for us to really have a good glimpse of the market, let's draw the fixed range volume profile from here to here and take a good look. Well, the one is actually here. See? Not that reliable anymore. Okay. We're gonna draw a horizontal line around this place. Okay. This is a new level where it is being traded, by most of the traders. Somewhere around here. Yep. So we found it. So we're gonna use two zone as a reference point. So the first one would be this one, and the second one would be this one. Okay, so now we have, this two level that, the market is comfortably, trading around. So now we can close this indicator, and there you go, guys. We found ourselves a level. Okay, we found ourselves a level, that a new level, where the buyer and seller agree to play around with. Okay, but so for here we do have, a potential zone for us to make some profit. But the bad news is, okay, the bad news is that is that right now it is currently floating in the middle ground. So I'm going to show you guys what do I mean by bad news. I'm not trying to, like, direct you guys, but I'm trying to let you understand that bad news means that for silver we cannot rush into the market. I know that I've been repeating about this for many days. Even me myself is biased, but the thing is this: it is currently, floating around here. Okay, so we need to have a really good understanding on, is this pullback, where is the power, where is the momentum of the pullback going? So let's take a closer look. Where is it actually forming? For the lowest one, okay, and then to the highest one. Right, it's actually here. This, I'm gonna make it thinner. And another one would be here. Which is the most traded volume around this place. Yep. Okay, then we zoom into the 5 minutes, and there you go, guys. We have ourselves, a market that we can try to monetize, try to make money from. Okay, so the trading plan would be simple. Guys, I need you guys to be here with me. Silver, we are currently looking at potential entry. It's just that we need to be slightly patient for now, because it is actually traveling in a middle ground. When can entry to the market, Carlo asks? Well, we can enter the market. Are you guys looking at the screen? Okay, we can enter the market when the market does this. Okay, when it does this, here, here, and then it start to go here, and then start to go down here. Okay, and then it start to form like this. The first retrace, we're not going to trade it, okay, because we don't know that is it going to be like continue. But if it doesn't continue, we're going to wait for the second drop, and then we're going to take a position here. Okay, so this is the trading plan for silver. Okay, we're going to take a long trade, okay, a long trade if the price actually hit $88, 88.055. Okay, but before that, let's take a closer look on the 5 minutes chart. How is the current momentum actually going? See, it's actually building up here. Yeah, this is the most traded zone. Okay, there you go. It is really preferred to trade around this zone. So the next question would be, what kind of market state it currently is forming, right? So for me right now, I'm going to share with you guys the thought process that I'm having. Now, when I'm drawing, so many lines, and I start to feel that there's noise instead of signal, I will try to like erase some of the I will try to erase some of the horizontal line, not because that I don't want to use it. It's just because that I don't want it to, affect me into taking trade that is not really, taking trade that is not really high in probability. So right now, for this one, I'm gonna like remove this line. It's because that even though that I understand that the most traded volume in 5 minutes is around here, but what I want is a high probability trade where I know the market will be much more, in our favor where it moves like this. Okay, it is traded around here. Yeah, it's forming like a breakout. Let's take a look at the rejection. The rejection point is much more reliable. It's not here. It's actually around this zone. See, so it's currently, in the build up, trading around here. Well, if you want to, okay, let me take a look. If you want to make like a short trade, a scalping trade, and is it possible to do so? Yes, because but the lot size would be 50% smaller than what I would be trading. So let's say for this size, if the price actually come to this area, okay, I would probably use like 1 lot to 1.5 lot for this one. And if I'm going to enter in this area, okay, if I'm going to enter here, I would probably use like 50%, just 0.5 lot, okay, of my actual intention of trading. So just because, the probability is lower doesn't mean that I cannot trade. It just means that I'm going to use a smaller lot size for intraday trading. So for silver, yes, is there an entry? It is an entry, but entry with a way more lower lot size, way more lower lot size, right? Now, the reason behind that is this. Let me show you. So based on the fixed range volume profile, the first thing that we want to take a look is that where is the price is preferably traded. Okay, it is actually here. You see, it is here. Okay, and then it is actually forming a compression within a price that is balanced, right? So you can see that it is actually forming a compression still. The only way that it would invalidate me, my stop loss would be to prove that I'm wrong. It would be somewhere like an enter around here. And then the stop loss would be here. Okay, this is going to be my stop loss. Okay, and then I'm going to do, a 1 to 5 aim. Okay, so there you have it. You see, this is gonna be a good trade. Okay, a good setting that is a good trade, but a trade that is way more smaller, a way smaller lot size if compared to this level right here. Because in intraday trading, I don't want to miss any opportunity. So Okay, right here I'm going to use a bigger lot size. Right here I'm going to use a even bigger lot size. But for this zone, I'm going to use a smaller lot size, 50% smaller for the actual, trade. So which means that I'm going to use that 0.5% for my entry for this one. Okay, guys. So now here's, you see the momentum is actually kind of low. And the next thing we can do is to really see, is the pullback strong or not, right? So we're going to use the fixed range motion again. I really love this indicator. And then we're going to really see, how high the inbound. You see, the price is actually trying to go back to this zone. Okay, it's much more preferable to trade around here. Okay, and which means that this pullback is actually kind of weak. You see, the price is actually not preferred to trade around here. So I'm going to wait for this candle to go down again, and then I'm going to ride a wave to do a buy stop for silver. The trading strategy will be simple. Don't enter now. Enter here. Okay. And for this one, 8790. I can make some aim. Yeah. Okay, guys, time to do a sell stop. Okay, time to do. Oh, where's my? Gosh, where's my phone? Oops. I think my. Oh, okay. It's actually. Okay, guys, silver. Time to go into the market. You can actually place a trade if you want. For me, I'm gonna do a small trade for this one. So I'm gonna go for, silver. I'm gonna do a buy stop. I'm gonna go for not a big size, just 0.5, and I'm gonna do like a buy stop. Buy stop position at 89.063. Stop loss strategy, make sure that you put it around like 87. 87's 85857 and 89063. Okay. All right, guys. That's a trade, guys. That's a trade. Okay, for silver, place. I already placed a trade at $89 and 063. Okay, 89.063. That is actually the spot that I do a buy stop position. Okay, you see, now let's see what the market is actually doing in real time. Here, see, so don't worry about this. Okay, it's traveling down. As long as it didn't break through this, if the candle actually break this area, okay, if it actually breaks this area, I'm gonna cancel this position. Okay, if it actually break this area, I'm gonna cancel the position. But for now, it is fine to place a buy stop around this zone. Okay, 8903. Okay, so before that, let's make an alert. Okay, to see, is it like cross it already? 9063. Okay, is anyone following the trade? Is anyone following the trade? If you're following the trade, show it in the chat box, okay? And make sure, guys, it is meant to be a more leaning towards like a scalping approach. It is not the highest probability trade, therefore use a way more lower lot size that you used to do. So for me, I am like using 50% lower than my actual approach. So if the price actually break through this zone, I'm gonna cancel this trade, right? So if it really, you know, went from here and touches here, I'm gonna cancel the trade. Okay, but based on what I'm seeing, it's not gonna happen. Okay, based on what I'm seeing, the price is actually much more preferable to, you know, going down here and then, you know, test it a little and then try to, you know, retest this zone. Okay, so yeah, this is what we call by arm on. Okay, arm on, ARM on, agreeable rotation model on. Okay, and what do I mean by agreeable rotation model? Agreeable rotation model means that the price is being agreed to trade around this zone, so we're gonna make money through the rotation. Okay, so I'm gonna do some notes here so that you guys can understand. So we are trading on ARM on. Okay, ARM on. The reason behind, you know, market state. Okay, this is arm on. Okay, arm on. Okay, make money from price acceptance, where the price is being accepted by that zone, so we're going to use that zone to make our money. Okay, so right now I'm going to set two alarm. One is here and another one is here. This is much more important. For the silver one, we're going to set alarm for $88, 88.055. If the price really hit 88.055, which means that we need to cancel the position. Okay, which means that it is invalid, you know, arm on from arm on to arm off. Okay, but it also means that if the price actually hit here, we might have, and we will measure it again to see, is this another potential entry around here. Okay, this is actually, if it hit here, if the price actually, you know, break through around this area, if the price really, you know, go all the way from here and it penetrate here, I'm gonna wait until it reach to this point. Okay, I'm gonna wait until this point, and then I'm gonna wait it to, you know, come back up again. If the pullback, you know, first time retrace it, and then it try to come back here, and then the momentum is low. If the momentum is low, and we can actually, you know, come back here to make a profit to on again. You feel me? Right? If it's here, we're gonna do it. If it penetrate too, I'm gonna forget about this trade, and I'm not gonna wait patiently for this trade. Okay, I'm gonna wait patiently for this trade for the arm on. So this is the strategy that we're gonna use. So if it hits, I'm gonna cancel this position, and I'm gonna open another position for here, and we're gonna aim higher. Okay, so this is what I'm gonna, you know, use as my reference point. Let's take a look at the fixed range motion. Okay, so stop loss strategy. Sometimes I use this as a stop loss strategy as well. So you see the range is gonna be somewhere, you know, I can make it somewhere around here. Very low point, very low point. Maybe even here. Use the lowest point. Okay. And in around 1 to 2. Yep, that would be a good name. So yeah, this is the setup, guys. Okay, this is the setup that we're gonna use. If it break through this ceiling, cancel this position, and we're gonna focus on this one. IRA, what is the difference between buy limit versus buy stop? Yeah. So buy stop is actually, where you want to trade like false break. False break means that the price actually, break through, and then you want to use that momentum where it comes back up. So you think of it like this, right? You open a position here, and then the price sort of like, you want to open a position here, but you didn't open yet. The price break through the level, and then when it is want to like retrace and pull back for continuity, you open a buy stop here and it hang and take your position, and then you like, go the way all up. So that is actually a buy stop. Okay, buy limit is something that's different from buy stop. For me personally, I don't really use buy limit that much. I don't really use it because my trading strategy requires me to use buy stop and sell stop because I trade agreeable rotation model. I trade the retrace after the breakout. So that is why I only focus on sell stop and buy stop. So far so good. Okay, so far so good. So gold, we do have a position hanging right there. So meanwhile, while we are waiting to see what's going on, we can let me put a pending. Let's put a, okay. So coming up next, what do you guys want to analyze? Do you want to analyze gold? Do you want to analyze Australian dollars, Euro dollars? We can go to check out some for major pairs as well. Okay. So meanwhile, we let the market do its thing. We're gonna go to take a quick look at maybe the gold market. Let's take a look at the gold market, okay? Gold market, 4 hours time frame. First thing first, use a fixed volume profile. Let's see. Yeah, balance say gold. See, okay, based on 4 hours, we do have a zone, but I don't know why. This got point of control, but I'm curious, why is it here? Okay, for this one, I'm gonna try to really get a good glimpse on the market. Let's go to the daily one and see how it goes. Whoa, it's been like, wow. It's been going up, guys. It's been roaring, you see? It's been, let's take a look at the daily one. Ooh, the most traded volume is actually here, surprisingly. Oh, then another lowest point would be here, till the highest point. I see. So it's around here, the zone. Okay, I'm gonna mark it, just to really have a good glimpse of what the market is doing. Forming a compression, you know, markets try to like break out, rejected, trying to back here, but now it's like still climbing up again, which means that it almost feels like the market, didn't really appreciate this price zone between 5024 and 4471. So it's fine. Let's zoom into the 4 hours. Now we can have a good glance. Okay. Now what we want to see is this. You see, the price is currently like forming a compression. It's, it's already forming a compression. Okay. And the compression actually successfully break out. But the compression, didn't really have that kind of momentum. And then it now drop again. But it seems like it's forming a new range right here. So the next thing would be to really see, to try to see how strong is the pullback. So if you want to see how strong is the pullback, I'm going to teach you a trick. We're going to use the fixed range volume profile, same thing. And then we're going to like do it here from here, the lowest swing. There you go. This is actually the range where the market is agreed to trade. Market. Okay. Remove it. Okay. Now the next thing would be go to the 1 hour time frame, and then you have it. Okay. Now you have a good glimpse on the market state. Now here's the thing. The trading strategy for gold is this. We want it to give us a signal where it is telling us the pullback is getting weaker, right? We want to find a signal where the pullback is telling us the pullback is actually getting weaker, and it is going back. We want a signal to like go back to this zone. If we have that kind of signal where the price is trying to, form here, 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 and then it fails, it start to, come back here, 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 and we might have a chance to make a profit through, the pullback. But first thing first, we need to see, is it strong enough? Okay, if the momentum is strong, we cannot do it. So see, here is the pullback. It refused to enter. Now the next thing would be have a close look. Okay, it's preferably traded here. Yeah, this is the most traded volume. Five minutes, play around. Okay. First thing is that we already found, the zone where the market is much more prefer to trade on a macro spectrum. See? Okay. So we do have it already. We have two layer. First layer would be this zone, but this one is gonna be wait a while. So I'm not gonna wait for this price, but I'm definitely gonna put a alert for this one. So the opportunity actually, the arm on opportunity is actually around this zone. Okay. The next question would be, how powerful is this compression? That is the next question, right? How powerful is this compression? So I want to take a closer look, you know, of how powerful is this compression would be. Let's prefer to trade around here. Hmm. 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 Guys, so now for gold, based on what we see, is still very powerful. Gold is still kind of powerful. It still have that kind of strength to want to keep on going up. Because based on the volume profile, all of the which is the point of control, is actually showing upwards. I'm gonna give you an example. So you see from this point until this point, the lowest swing until the highest swing. Oh, no, not this point. This point, right? If you take a look at the previous one, you see that is one point of control. This thick black line right here, horizontal line, is actually where most of the buyers and sellers is agree to trade. So this is actually from this upper sector, and another one would be from this one to this one. It's also around here, guys. So it means that currently there's a lot of buying and selling power, which is a lot of auction is still going on here. Okay, the actual zone, the next zone, which means that if you really think from probability, okay, if you really think from a probability point of view, it has a way lower probability that the market is gonna come back, to this zone. The way more lower probability that the market is gonna come back this zone. It has a higher probability that the market is probably gonna forget about this zone, and then it start to build something new here. Okay, it's starting to find for a new zone. It is still in searching. Okay, if you will really want me to not predicting the direction but just see what I see, it is currently searching for a new zone. Okay, it is currently searching for a new zone of agreement. Okay, it is searching for a zone to do this. Okay, it is searching for a zone to do this structure, but when will it start to form that zone? We don't know. But what we know, it is searching for that zone. Okay, now that gives us a few indicators, a few signal. Signal number one would be it is still climbing. Okay, it is still climbing. It has a strong indication of still want to climb. It's gonna climb, play a little, and to see is this the zone, and it's gonna climb, and find. So it's almost like this. Okay, it's like this. It's gonna climb, and it's gonna find a little while, and it's gonna climb, and then it's gonna find it. Okay, it's gonna climb, it's gonna find it, until to a point that the market actually agrees that this is gonna be the place where we're gonna do, you know, a new balance structure right here. So currently, now before I continue to talk about gold, I need you guys to answer me. Do you guys understand the current analysis that I'm giving you guys? Right? So it is actually not ARM off. It is also not ARM off on as well. It is actually going from price rejection to price agreement. It is actually from on and off in the middle line. Okay, it is actually in the middle line where the price is currently searching for a new zone that they can actually, perform the auction fluently. Currently, it is still finding that zone. That is what I know. So for intraday trading, yes, there's still, potential trade going on. At least we know that it is climbing. Okay, it is not purely stick to our trading strategy. If you were to say to purely stick to a trading strategy, we want to trade for price agreement, right? But currently, it is actually in a phase where it is still searching for that zone, which means that, well, it is searching. It is searching, but we don't know that when will it actually end the search, because we are not God. But I'm gonna do this little structure. It is searching. I can tell you that. Okay, it is searching, and searching. Okay, so it might have another, so we can do like a small trade, but not a big trade. Definitely not a big trade. Always small trade. Silver, same thing as well. Speak about silver, let's take a look. Ooh, is it climbing up? Yep, it's climbing up. I did open the position, but it didn't break through. And then, we'll see how it goes. Climbing very slow, to be honest. But if it's gonna break, it's gonna break. It's fine. We just leave it there. So yeah, 5 minutes. Is there like any potential trading opportunity? Yep, I can do a buy stop here because you see the market structure is actually moving in a favor. But guys, for this trade, I personally think that it is not a very, very good trade for big position size. So it's the same as silver. I'm gonna like still, play around with you guys. It is still a good trade. It is still a trade. It is still a tradable trade. That's what I want to say. But it is not a trade that give me that kind of confidence to, make good profit. So first thing first, let's talk about the structure. Okay. So we are basically saying that we are basically forgetting about this zone. I'm going to delete this zone. I remove this one. Okay. And which means that we are trying to go from price acceptance to price somehow, like, price not rejection. We try to monetize and make money while the price is searching for a new balance, right? So rather than keep on waiting, we can try to make some money during the waiting period. So what can you do? First thing, understand that when will I be wrong? Okay, I will be wrong when the market actually touches this zone right here. So before that, first thing what I want to do, I want to look for the zone that is actually very, very slow. This is, yeah, this would be okay. Somewhere around here. If it break through here, it means that I'm wrong. Well, I can accept. Yeah, it's not good. I'm gonna make it I'm gonna make it as tight as possible, to be honest. So, and then I'm gonna make my profit. I'm gonna take the profit somewhere, around. Okay, guys. Now, is this a good trade? That is the question that I need to answer for myself before I answer you. Now, how about you tell me your thoughts, okay? Do you think that this is a good trade? Before I say my thing, before I say my personal opinion, just to really understand that you guys actually learn something from me, so that let me ask you this question: do you personally think that this is a good trade if we were to do like a long trade right now? Now, I'm gonna say this is actually not a good trade. Okay, it is not a good trade for a few reasons. Reason number one would be the TP, which is I expected to make profit, is currently at this price, which is 5,002. Okay, and the expected stop loss would be, around 5,001, 5174. If you base on risk and reward ratio, I'm actually trying to risk. I'm trying to risk $1 to make 70 cents. And if you attend my class yesterday, you understand what I talk about asymmetric profit, right? In trading, we want to make profit that risk $1 to make $3, or at least risk $1 to make $2. But based on what I see on the chart right now and the state of the market, it is actually in a current phase where the market is currently, is currently doesn't show a very strong strength of keep on like going up, and it also seems like it is trying to find a zone to keep on doing the rotation thing. And if I were to do a long trade here, it means that I have no choice but to risk $1 for 70 cents. That is just a metaphor. So let's say I'm trading at a $1,000 $1,000 risk, which means that I'm trying to make, I'm risking $1,000 to make $700, which is not, within my rule. So I personally don't recommend it, okay, but I will trade it when it shows me a stronger signal of, compression, okay, where it shows me a stronger signal of compression. But let me take another closer look, okay? Now, you see, it's not worth it. You see, okay, now we execute our position at 5 minutes. That is our execution, okay? We use 1 hour to really tell us what is the regime of the market. If you take a look, yes, it seems like it's a compression, but the compression actually works around here. Okay, this is the real legit compression. This is the real legit compression. And starting from here, it is not valid anymore, right? It is starting to form a new compression here. See, it is actually forming a new compression here. Okay, so which indicates, now let me see. Now another thing would be, let's take a look at the buying and selling volume. You see, so basically we're in a situation where the price, might not want to go here, it might want to go here. It is consolidating. It is in a liminal phase where you want to form a new rotation, but right here it's going to be chaotic, so it is not a really good chance for us to go in yet. It is not a good chance to go in yet. It's not really worth it. Okay, it is like trying to burst up, it's trying to burst down, which means that the market, which is the buyer and seller, is still constantly, negotiating and try to find an agreement point to make that trade. For now, as a retail trader, as a small trader, if you go in where the big players, sellers and buyers are, where the lions and tigers are fighting, and if we retail traders, like a small sheep, like a small rabbit go into the market, well, we're probably gonna be wiped out, right? We're probably gonna be like, wipe out. So it is not worth it. Okay, it is not worth it. I'm gonna tell you when it is worth it, right? When it's gonna be worth it. The only time that I think that it will start to be worth it is this. Okay? It is, let me cancel this position first. Okay? It will be worth it when, okay, when it start to like at least break this level. Okay, it break this level, and then I will start to check, the new, buyer and seller momentum, and then we and then it tries to go here. Okay, and then it tries to go down again. I don't have to wait that long. I want to wait for this formation to form. If it formed this signal, okay, it actually means that it's a very good indicator that it might find a new zone where we can finally do ARM. Okay, ARM on. So this is the structure, but for now it is still not worth it. We need a few more signal for us to really see, is it gonna form that way? But let me draw a zone out. Okay, it's around, no, not here. Yep. So we go for the one that has at least three. Okay, yep. Okay, guys, I want you to pay attention on this one. We have like at least three candle body being closed for this price range. So I'm going to use this as a reference. You see there's also a few rejection point where the price actually rebounds from this zone. So this is actually something that I would be considering. So the idea is this one, guys. So for gold, I want you guys to pay attention on 5149. Okay, 5149, and I'm going to tell you the reasoning and analysis behind 5149. If the price actually penetrate through this area, okay, and this is where we're going to do a small little trade. Okay, we're going to do a small little trade, right? Okay, this is where we're going to do a small little trade. Okay, so yeah, if it touches this area, we can do like a short trade. If you go to 5 minutes, 5 minutes, we let it travel. So this zone, dangerous. Don't do anything here. But this is where we're gonna do our magic. Okay, because this actually sends an indicator that it is starting to found a new price to play around. So this is where we're gonna do our trade. Okay, around this area. So the proper place to do it, you can do like a long position, this, and decide where will you be wrong. Okay, and then you can write a profit to 1 to 3. Now that is what we call an asymmetric trade, right? You're risking $1 to make the biggest potential of $3. If you compare with the setup just now, right? If I make if you compare with the first one, I'm risking $1 to make 70 cents. And right now for this position, it allows you to actually risk $1 to make $3. Okay. As for me, it's like risking $1,000 to make $3,000. And that is what I'm aiming for. It is always worth it to really trade with the market regime instead of, trying to force yourself to find a trade. I know that I'm very specific in trading. I know that I'm very specific in, discovering signal, so that when you guys, few of you guys ask me about, do you have signal? Is this like a signal thing? The honest answer would be, I'm not giving you guys signal. I am giving you guys the thought process, the entire thought process and analysis that is being put into mind to find that signal. And when you find that signal, well, unfortunately, it may disappoint some of you because the signal may need some patience for it to, do the favor for you. But if you guys really did follow my trade for the past few weeks, well, most of the trade the signal that I provide is actually profitable. Most of it is actually profitable. Why? Because I took my time. I really took my time. I know that some teacher out there, they've been like giving like 5, 10, 15, 20 signals per live trade session. But what's the point of that, guys? If you're losing consistently for like 10 to 15 times, you're gonna burst your account. And what I want in my community, what I want in Forex, is actually a bunch of students that can grow, can learn, and more importantly, can profit in peace together in the financial market, rather than just hyping you guys up, finding the right signal and finding the signal when there's no signal, and then pop, 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 and then gone, right? I'm not gonna do that. So for me, for the gold setup, this is the one. I have two setup. One is this one, a potential. One is from silver. So this is on. Let me copy this. Okay, I'm on. Okay, so here, this is the one. So I have two set up, guys. Okay, I'm gonna send to you guys. And I'm gonna take a snapshot for this one. And I will also take a snapshot for silver as well. And this is the two setup. And another one would be this one. Okay, so I already show you guys the proper setup for today's analysis. I need to wait. Unfortunately, I need to wait. Money is still money. Okay, so yeah, for gold and silver, for the silver part, I want you guys to understand if the price actually hit this zone. Okay, we're gonna close the first position. Okay, if the price actually closes this zone, we're gonna close the first position. Okay, which is this one. Okay, if we hit it, I'm gonna close the position and I'm gonna wait for the second position in the silver. Okay, and for the gold, I'm gonna wait for the price actually penetrate to there, because it actually allows me to have more room to make the asymmetric profit. Okay, so a preferable trade is always this one. If you want me to really vote for the preferable trade for this one, it seems like I'm gonna close the position already, because the market momentum is actually really close to here. It is too far away from this range. Okay, it doesn't have the momentum to climb back. So guys, I will make the call. So for silver, the first position that is buy stop that I hang just now, I'm gonna close it right now. Okay, I'm gonna close the first position. All right, guys, I'm gonna show you guys so that you guys can, just in case you guys didn't really follow it. Okay, so for this position, delete it. For silver, delete this position. Okay, it is not worth it. It is already having that kind of momentum that is too strong, and I'm gonna wait for a better probability to do so. So I'm gonna delete this one. Okay, delete this, and now we have a better structure for this one. Okay, so this is where we're gonna do it for a high probability trade I'm on. Okay, same goes to this one. All right, same goes to this logic as well. We're gonna use this as I'm on. All right. Okay, so just a moment, just in case you guys actually I will give you guys the note later. For now, just remember to close that position. There you go. This two is the highest probability trade, based on this 2 hours analysis, the highest probability trade. It is okay, to wait for the odds to happen for us. And, rather than going in and do stupid stuff that bursts your account. Okay. Yep, that's it for now, guys. I hope that you guys really enjoy the class. And Monday to Friday, today is actually Thursday, okay? So Monday, Friday, every Monday, Friday, 2 p.m. to 4 p.m., 4 p.m. to 6 p.m., 6 p.m. to 8 p.m. We have three teachers, me, Prem, and Alan. We're gonna do our analysis. Feel free to really come in if you have time. All of us, we have our very own perspective. We have our very own hypothesis to trade the market. Everybody's style is different. And if you disagree with my style, you think that it's too slow, well, feel free to maybe go to Alan's class or Prem class, okay? Because they are fast, but they also have their edge, okay? They also have their very own edge. It's just that everybody nervous system is different. For me, I love to take my time so that I can really like, sniper. I'm like a sniper. I'm not an AK-47. When I use AK-47, I fuck myself up. Okay, when I use sniper, I make good money. That is how I roll. So if you are better at using AK-47 or M16, I am probably not the teacher for you. But if you love, sniper style trading analysis, then feel free to really, learn from me because I am a sniper. Okay, I love to use sniper. That is how I actually trade. So yeah, and for information, from now onwards, I will do TikTok live, just to really see how the algorithm goes on TikTok. Um, TikTok, I will do it at from 9 to 10, 9 p.m. to 10:30 p.m. So if you guys, are on TikTok, feel free to subscribe to our channel. Me will be doing the teaching there. And yeah, thanks for investing 2 hours of your time, in Profit in Peace. A quick recap before we end the session. First thing first, remember, you know, to really understand the origin of risk and really learn how to appreciate the beauty and the art of probability, where how can we actually negotiate and against the god, right? Not like people from the 1650s, they all they can do is pray. But today we can use indicators, we can use risk management, we can use probability to make good money in the market. So when we are given this potential, why not just make full use of it when we can? So guys, thank you very much for spending time with me. My name is CG, and it is always my honor, my blessing to provide, share my knowledge, my experience with you guys. And I also thank you guys for really become a great audience. Risky, Alan, Christina, everyone, now you can finally go back to discuss about your Kung Po chicken and your Mapo tofu. Okay. So guys, thank you very much. And I'll see you guys tomorrow. And stay tuned if you want to learn more about trading because for the next session, we have Alan coming in. Okay. So thank you very much. I'll see you guys tomorrow. Peace.